Good morning everybody, and this is your Forex day trade setup for today. So starting off with Eur-USD, and we have come up to the level I gave you yesterday, and that is 118.767, but a lot of resistance here, so we need to break above it and come and retest it before we even start looking at a potential move back to the upside. Trend is down at the moment. Look at the oscillators. We've got diversions here. That's continuation diversions. You can see high, low, high, higher, high. So that is continuation diversions off a level. So my preference would be to the short side. Definitely not going to do it now. We wait for the European Open. One thing that is against us on the 1 hour is that the moving averages have crossed over into a bullish, potential bullish view. And then obviously we're building this bit of a triangle here, so a flat top triangle. And that's typical at the end of a move. It's also a bigger inverse head and shoulders. Actually, it's a double left shoulder head and then a double right shoulder that's forming. So I would sit, well, not I would, I am sitting on hands until we break through 118.767 to the upside, or alternatively, I'm looking, well, let's just bring that down to something more realistic. So you can see where I'm picking this up. You can see where all the interaction has been. I'm looking for a break below 118.500. So 118.500 break and retest will break a trend line as well. That'll give us move to the downside. Otherwise, it's 118.767 break retest up there. Then we have a potential triangle or head and shoulders. It doesn't matter which way you want to do it, but you have a fairly decent move to the upside back to 119.664. US dollar Japanese yen, similar kind of scenario here. You can see we've come back into the zone I gave you yesterday. Slow process being a Monday, but that's typically what happens. And you can see it's a bit of a grind. We do have a moving average crossover, but we've also got the oscillators crossing over as well. Now, this level is critical. 110.400. We need to reject it properly. And the nice thing about this is the rejection is fairly close. So we need a break and retest of 110.277 for a move to the downside. That'll be a continuation of the bigger trend. Just to highlight that, you can see we're rejecting the moving averages here. Be moving up, so definitely an opportunity here for a potential trend reversal. And whenever you've got opportunity for trend reversals, it pretty much takes a while before we turn around. So that's the picture we've got at the moment. I wouldn't put too much into this. I'd want to be above 110.500. So break above 110.500, come back and retest it, then these moving averages should cross over the 155. That would be confirmation for a move to the upside. And then break and retest of 110.270. So break down, come back, retest. That will give us an opportunity to buy into this. There's a couple of trend lines. You can see there's one trend line, which we've broken and retested. There's another one that we are still above, but I would just put that trend line in there. Okay, so this is the level you need to pay attention to for the downside move, 110.277. British pound, Japanese yen. So we've been in an upward trend for quite some time, and then we've got all this volatility. Have a look at these oscillators. We are above the 155. Don't really like that, but we are still in a bearish view on the moving averages. So that's a 33 and the 66 EMA. This level that we looked at yesterday, 153.450, that is what's being tested, and that pretty much is my line in the sand right now. So if you look at the hour, you can see we've got a crossover of all the moving averages. We've got a inverse head and shoulders brewing here as well. So this needs to give way for any move to the upside. So 153.456. Just look to the left though. Look at this congestion here. So just be careful of that. This was public holiday trading here. So in the US anyway. But just pay attention to that. That's fairly important. And yeah, I think, we've kind of a bit of a confusing pattern, isn't it? So looking at the oscillators, I want to see a pullback. So pullback back onto 152,770 and see if we can hold that. That would work. Alternatively, we're probably just going to go sideways while the oscillators ease off, and then we're looking for a break of the range. I don't want to be long on a break here at the moment, not with the oscillators where they are. So I want to see a bit of a pullback, oscillators come off, and then we'll look for it. So it does make the most sense to come back and test the 155, which is 152,774. So that's the area we need to pay attention to. Pull back onto that, start moving to the upside, switch down to the 15-minute. That's your stop area below the low of yesterday, and see what happens from there. But yesterday was pretty much a big down, big up day, so a bit of confusion there. Lastly, Euro British Pound. This is looking fairly interesting. So the longer term trend here on the 8 hour has been drifting lower, sort of kind of half range, half downward trend. It's really been a messy downward trend. But as I've said a couple of times, there's massive monthly and weekly support in this area that we're in at the moment. So it's to be expected. Not really interested in being short here. Want to be short from the top because the trend is down. So also not interested in being long at the moment. And the reason for that is you can see pretty clearly on the 1 hour how we moved up to the moving averages and then kind of rejected that. So this one is still sit on hands for me. Something's about to give, that much I can guarantee you. But it's kind of like a Bitcoin pattern at the moment. It's just continuing forever. Well, and the DAX, just continuing sideways forever and ever. You know what I mean? But it won't do that forever. When it does break, it's going to be a fairly violent break in whatever direction it does go. So this is sit on hands for me at the moment, but definitely opportunities on the other three pairs. Anyway, hope it helps, and we'll catch up with you later. Cheers for now.